partnerships are not something that comes to mind when we think about international trade. We often picture ships carrying containers, containers stacked up on ports, and trucks out delivering the goods from those containers. But modern global trade is different. Yes, we still have the traditional containers moving around the world, but more and more of a global trade is built on partnerships. My name is Karen Newton. I'm a business and wealth strategist. And what I do is I look at what's happening in the world, global events, and I look at the ripple effect so that we can decide where to invest for the future or where to build our businesses. So, welcome, bonjour, hola, ni hao. Global trade is increasingly being built on partnerships. Businesses are using strategic relationships to access technology, expertise, manufacturing, distribution, access to new markets, all without having to build everything themselves. Now, these partnerships create leverage. Right? So each organization contributes different strengths. Now, this allows both sides to potentially grow faster, more efficiently than they could independently. If we look at the automotive industry, this demonstrates how interconnected trade has become, because we have vehicles can combine technology, components, investment, intellectual property, and manufacturing from several different countries. And it's not just the automotive industry. When I lived in the UK, we used to see aircraft parts for Airbus moving around the country and over to Europe for final assembly, with wings, airplane wings or other parts being manufactured in the UK and then delivered to Europe for final construction. So these strategic partnerships become more and more valuable to the businesses. And we expect better products as a result of this. Now, Chinese, I'm going to go back to the automotive industry, but Chinese and European automotive partnerships are actually blurring traditional trade boundaries. For example, a vehicle using Chinese technology can be manufactured in a European factory. Now, those parts, that technology, where does it originate from? If we're looking at a country of origin, is it European or is it Chinese? And this makes trade and point of origin very difficult to establish. Now, partnerships also create dependency. Now, reliance on a particular supplier, a technology provider, or a strategic partner can become a vulnerability, and it can become a risk when circumstances change. So we've seen over the past 12 months, 18 months, the Crypto.com and Trump media relationship provide an example of this. Partnerships can make strategic sense when they're put together, but when they don't have mutual benefit to each country, they can go their separate ways. And that has an impact on markets. It has a ripple effect. And those ripple effects help us to determine as investors where we think the next opportunity is going to be. So when we understand who a company relies upon and what happens when an important relationship is changed, this can reveal risks or opportunities, and often both. So the same principles apply to business, and it doesn't matter the size of the business. Now, imagine that you are a flower vendor. When I say flower, I mean roses or daisies or whatever. I'm not into my flowers. But you're a flower grower. And traditionally, you would go to a local market to sell what you've grown. But these days, planes can be going out carrying your produce to another country where you have a partnership with somebody who has access to the markets over there, and they are selling your goods for you. When I lived in New Zealand, there used to be flower planes going out to Japan. Yeah. This is how trade partnerships are developing and changing the way we literally do business. Now, today, as a small business, we have access to those markets. We can build those partnerships because AI can help us develop the systems that were for large businesses in the past. We can now build those businesses ourselves. And so it's when we look at a partnership, whether it's a new one being formed or an existing one that ends, the important question that we've got to look at is what happens next? What is the potential? What is the risk? And how likely are those two businesses to continue that partnership and the benefit to both of those businesses? Now, if you're investing in shares, these partnerships are essential to understand. Because if you're buying in a company that you believe is going to grow, and then you find out that, hang on, it's dependent on this partnership. What happens if this partnership isn't sustainable? Then the investment is an extremely high risk investment. Something you thought was a good investment suddenly becomes not so good. So when we're looking at businesses, when we're analyzing the business, if we're growing our own business, these partnerships are essential to understand. They become part of the infrastructure of a business, but they are also part of that business's trade or that business's global trade, if in fact they're trading globally. Now, these businesses, if you want to enter an international market, you could use partnerships. Well, let's start at the beginning, right? In the past, if you wanted to then expand your business internationally, it meant you had to find somewhere for your offices or your factory. You had to recruit employees. You had to develop local technology. You had to create distribution networks. You'd have to obtain licenses, and you'd spend years developing customer recognition. Or you can start building partnerships, because the benefit of a global strategic partnership is that they can supply access to new markets, give you access to specialist technology, give you access to existing customers, distribution networks, regulatory information, the knowledge, manufacturing capacity, finance and investment, local expertise. Both these parties bring something into that relationship. I remember coaching a group And that group, and there was one person in there who was talking about expanding their business into the next village. And when we started listing everything together, they decided that it was not cost effective to actually develop their business the way they had intended to develop it. Because even to go, and in this instance, we were only talking about 15 miles down the road to another town, the cost involved in that, the infrastructure they needed to set up, the markets they had to develop, it was huge. And that put them off. Now, if they'd had the opportunity with what they were doing to build a partnership, then that would have made the business venture more viable. As it was, they kept it as a small business and eventually sold it. So ripple effects from these kind of decisions can be good, bad, they can be beneficial, they can be negative. And you as an investor have to understand these partnerships, have to understand the ripple effect, and have to be able to see where you think the benefit is or isn't. So when we think about investing in a business, if you get a chance to analyze accounts, if you've got a chance to really go into the numbers of a business or understand that business, it's essential to start looking at partnerships. How good are the partnerships that are there? How effective are they going to be? How dependent is that company on it? And if that partnership breaks down, what is the implications for that business growing? Let's talk a little bit now about Volkswagen as an example. Volkswagen invested in Chinese electrical vehicle manufacturer XPeng, with the company subsequently expanding their collaboration around electric vehicle technology and vehicle architecture. Stellantis also took a substantial stake in a Chinese vehicle manufacturer and formed Leapmotor International, giving the Chinese manufacturer access to Stellantis' international distribution and manufacturing capabilities. So sometimes the partnership can be a document, sometimes the partnership can be a company investing in another company. So we're not looking at simply going and buying shares in a company and waiting for your dividend to come in. Each of those companies brought something to the market that the other company wanted. So when you look at investing, or if you've got a business and you are looking at growing your business, then maybe those strategic partnerships are an essential part of the decision-making process. It's not a case of just looking at the numbers. You want to know what the partnerships are. Because what we learn from this is that globalization isn't simply about products traveling from one country to another. It's increasingly about networks of relationships that are creating value together. Those relationships move capital, they move knowledge, technology, services, and products around the world. The end of one corporate partnership might look like a small piece of news, but when you look further out, you may see suppliers, customers, investors, industries, and even countries affected. So that's one of the reasons why I always try to go behind the headlines. I don't simply look at what happened, I look at what happens next. Because in business, markets, and investing, a real story is what is the ripple effect?
Disclaimer: the information shared in this podcast is for educational and informational purposes only. It is not intended as financial, investment, legal, or tax advice and should not be construed as such. I am not a licensed financial advisor, and the strategies discussed are based on personal experience and general market knowledge. Always do your own research and consider your individual financial goals, risk tolerance, and personal circumstances before making any investment decisions. I strongly recommend that you consult with a qualified financial advisor or licensed professional before acting on any information discussed in this podcast. Investing involves risk, and past performance is not indicative of future results. By listening to this podcast, you agree that the host and associated entities are not responsible for any losses or damages arising from the use of this content.